we are seeing deep cuts across Nikkei, Hang Seng, Shanghai and the other markets as well.
Core operating profit growth, that's up about 10% sequentially, which is on the stronger side.
Piramal Group has finally emerged on top in the race to acquire DHFL, securing almost 94% of the votes from the Committee of Creditors.
14,250 is the sacrosanct number. So 14,250 to 14,350. Let's give it a 100-point range. This 100-point range for me is sacrosanct.
Down about 15 points, but there is a slightly bigger cut in the mid-cap.
It's time to be slightly cautious and selective. This kind of parabolic moves almost never sustain.
Under the affordable rental housing complexes, we have already signed agreement with 29 states and union territories.
Around 155 points on the Nifty, 14,278.
Board has been discussing now to move to the next level of success that we had over the last 4 years.
Requesting every citizen to take the vaccine because the complication of COVID is 1,000 times worse than the complication of vaccine.
They're down 150 points on the Nifty, 14,287.
Okay, 14,263 was the low. From that point, we had over 100-point recovery. In the last 5 minutes, there's been another hit that you've seen in the market. But there are a couple of points. Of course, Reliance has led the recovery along with HDFC Bank. The mid-caps continue to see a lot of selling pressure. That index is down about 400 points. The market's been giving some warning signs of late. We've discussed that at length, but for the last couple of days, it looks like those warning signs have turned into a bit of a reality. Let's see what the last hour brings for us. Surabhi, hi, good afternoon.
Good afternoon, Anuj. Yeah, it's quite interesting because, all throughout the session till some time back, it seemed like we weren't getting any recovery. Then there's this 100-point pullback. Let's see how this goes. By the way, internationally as well, European markets, they're now little off the lows. The color is still red, but now the cuts aren't that deep. The dollar, if you're tracking that, is still, pretty strong. So that's the global context. What do you think of things, Anuj? Because, just before the recovery, it was becoming a very one-sided market, right? It was just HDFC Bank and Reliance, and otherwise it was a broad sell-off. What do you make of things right now?
I think, Surabhi, for starters, I'm not surprised that, the market defended 14,250 because 14,250 on the way up was a massive resistance. And once you took that out, it always becomes support. So first test of a big support is always respected, and that's why we spoke about this zone in the morning as well, that this, and if the market has to bounce, this would be the zone. But the market recovery concealed more than it revealed, in a sense that it was essentially HDFC Bank and Reliance. And Reliance for the last 2-3 days has been trying to help the market. Today in particular, it's been very strong. And I think if you saw in the morning, it was HDFC Bank, and now towards then it was Reliance. So these two stocks have really contributed. But the mid-cap market is the one which has been giving me some worrying signs for last many days now. It started with the phase of distribution, and I think now you are seeing clearly selling pressure, because if you see the advanced decline, that's consistent at about 1:3, 1:4, and that's not a good advanced decline to look at. For example, from the recent highs, if you see how much has the Nifty corrected and how much has the mid-cap index corrected, the Nifty is down about only 2%. The mid-cap market is already down about almost 5%. Now, it could just be another violent shakeout. But the big question for me is, has the trend for the market changed? I think it's too early to answer that. That question only, comes into play if we start to close below 14,250. As long as 14,250 is holding, I think you would see that at some point there would always be this big buyer who will come in and try to support the market. But even this recovery is getting slightly sold into a little bit. So just beware of that. Let's see if we have made a low of the day. I think that's going to be crucial.
Okay, absolutely. Right now, we're still down about 80 odd points. The mid-caps, of course, are suffering a lot more. So let's get started and tell you what's lined up on closing bell today. Reliance has been the one leading the recovery in the market. The Nifty is now about 100 points off the lowest levels that we saw in the earlier part of the session. The mid-cap index is still down. No recovery there, still losing about 2%. So we'll discuss all of this with our technical as well as our fundamental experts on the show. In terms of individual stock action, Total SE has picked up 20% stake in Adani Green from the promoters. Now, we'll get you analysis on the stock. It has been, of course, the star of 2020. But what now? Is the news already all priced in? So some analysis and commentary coming up on the show. HDFC Bank hit a new high after the bank came out with its highest ever profits. buoyed by treasury income. Though there is some nitpicking on certain, perhaps, stresses building up in terms of asset quality. We'll get you the fine print and the analysis on the show. Also from the financial space, L&T Finance has been hit hard despite a strong third quarter, which saw collection efficiencies rise and an expansion in margins as well. So what's troubling this stock? We'll get you some analysis around it. When can we expect economic growth to revive, and which are the themes to bet on? That's the conversation with our alpha manager on the show today, Rajesh Kothari. He's got some interesting stock ideas as well that he will share with us.
Okay, how should you position yourself though in the last hour of trade? That's the thing we're addressing first up on the show. Mitesh Thakkar is joining us with closing strategies. Mitesh, good afternoon. Your thoughts on the way the market, by the way, there's a second round of sell-off which is happening now. Your thoughts on that, Mitesh, and your stock calls?
Yeah. So, Anuj, I think, one, you are highlighting the importance of 14,250 as a pivot. I think 14,250, 150 zone of 100 points is filled with multiple support levels. So, I think I would watch that entire 100-point area very, very closely. What is possibly, going good for the market is Reliance, trying to break out from its consolidation. Last 3 months, the stock has been sideways, and I would want to see a closing above 1995, 2000 levels to confirm some kind of breakout, though I have it as a recommendation for this show, and disclaimer that I also have some covered call spreads in Reliance. So we are quite bullish over here. I think once it crosses this levels of 2000, then I think the first target should be closer to about 2030 and then 2090 immediately on the upside. So I will be positive over here, and I think that would keep the market in check. So 14,250, 150 broadly should hold, and on the upside 14,500 is the first intraday supply pivot. So that's what we'll look at. The call, as I said, I think Reliance is one of the recommendations. It's a buy with a stop at 1960 for targets of 2010. It's moved up slightly, so on a mild 10-point dip can be bought. And Jubilant Foods is a buy as well with a stop at 2790 for targets of 2890.
Okay, and any disclosure on Jubilant as well, Mitesh?
No positions there, Anuj.
Okay, fair enough. Now, you know what, let's address one of the stocks of the day. The numbers look good, but the stock is down, and that's L&T Finance. Abhishek was detailing in the morning that the numbers look really good. So, there was a disbursement growth that we have seen after many quarters. Let's first hear out what the management had to tell us, and then I'll ask our expert on why the stock could be down today.
Disbursements has been the PAT growth that we spoke about, 10% from last year. Disbursements and good disbursement has been a main factor, but also other factors has been good fees, very good performance on liquidity and cost of funds, and obviously maintaining the asset quality. So disbursement in both tractors and two-wheelers has been our all-time best quarter. Forget last 10 months, 10 quarters, but all-time best quarter. And that definitely has helped profitability. My NPA numbers have gone up slightly to, or in fact come down, right? Yeah, 5.19 to 5.12 quarter on quarter. So largely remained the same gross NPA. Net NPA has slightly gone up from about 1.6 odd to 1.9. So that's where we believe things are better.
Okay, Deepak Shinoy is joining us from Capital Mind. Deepak, good afternoon. What do you think has gone wrong with L&T Finance today? Because the numbers look good. Is it just the overall nature of the market today, and of late some of the NBFCs seeing a bit of a selling pressure, or is there something more?
Possibly both, but Anuj, I haven't gone through the results in detail, so I don't know about L&T Finance. I mean, some parts of it will be related to the fact that they have resolutions of about 1,500 crores that have already been commissioned as of last quarter, because December 31st was the last date, and also potentially the impact of not being allowed to declare NPAs since August 31st. Because of the Supreme Court stay, that will also impact the orders. But also I think there's a globally, across the board, NBFCs are likely to come under more regulation. We're going to see some orders, something this week, I think RBI has mentioned this. This might result in some of the larger NBFCs having to keep aside some money for liquidity as a buffer, which I think can change their perhaps their asset profile, while not changing much of their liability profile. So that is one reason why I think you might see some changes here. But I think we should wait, of course, for this to happen. Also, disbursements across the industry, across the large NBFC industry, seems to be much better in the December quarter. And we'll have to see how much the NPAs eventually come out to. I think that those are the two things impacting it: the Supreme Court order and the potential regulation, that seems to be coming on NBFCs.
Okay, that's L&T Finance and NBFCs overall. Yes, we do have to watch out for those newer regulations. The discussion paper will be out in some time. But right now, we need to move on to another very, very interesting stock. And actually, before I throw it to Nimesh, we've got to pull out that one-year chart on Adani Green. I mean, it has defied gravity. It has defied understanding at points. Let's pull out a 1 year on Adani Green. Now, in the March of 2020, in the midst of the pandemic, I think the stock had crashed to about 100 there we go. It hadn't even crashed, actually. The rise actually began from there. It was about 180, hit a high of 1200 plus, and now we're looking at 928. That's been the story of Adani Green. The story today is, of course, we get to know that Total, the French giant, is looking at a large chunk of the company. They're actually picking up 20% equity in Adani Green. So that's going to be the largest, perhaps, share sale in a while by an Indian promoter. Let's bring in Nimesh for a clearer understanding of this. Nimesh?
Thanks, Ruby. So this is a large, fundraising by the promoters by selling 20% stake in Adani Green. So they will raise $2.5 billion now. Why this is important for the entire group as well? One, the promoters will become net debt-free post this fundraising, and B, this will help them to deleverage the balance sheet across the group and also reduce the pledge shares in various group companies. I believe the first to benefit would be Adani Ports, and there is a stated intention from the promoters that they want to bring down the pledge in Adani Ports going forward. In fact, as of December, the pledge has come down from 45% to 38%. And in the second quarter conference call, the management did say that they want to bring it to almost nil by September 21. So this money will be used for that for sure in reducing the pledge at Adani Ports. The second would be they will be using these proceeds also for the airports business and the renewables business. Now, airports will now be fully funded, and no further funding will be required for the airports business as far as the equity participation is concerned. Even for the renewables business, what I believe now is almost up to 25,000 megawatt of renewables. There won't be any more fresh capital required, because this will be enough to fund that as well. So both on the airports and renewables, it is well funded now. If you look at Adani Ports, which I've been highlighting as well, promoters has said that they want to bring down the pledge shares, and most of the brokerages have been writing about Adani Ports of late, raising target prices as well. So Bernstein raised the target price recently, and in the note they very clearly said that one of the key triggers to watch would be elimination of pledge shares. So that is something which is likely to come in days to come. So watch out for pledge reduction in group companies, and this money will be used for the airports business and for the renewables business. So big fundraising at the promoter level. This will really help them to deleverage the balance sheet.
Okay, got that. Thanks, Nimesh, very much for giving us the background and the analysis on this. Deepak, your thoughts, either on Adani Green or on the rest of the group as well. I don't know. I guess if someone got lucky, they were riding this tidal wave, this tsunami, then great. But it's already off. It's off about 20-25% from the peak, the stock. Would you look at it at all? And what about the other group companies?
So, to be honest with you, the group is very dichotomous. There's Adani Ports. Now, this company is able to raise funds at 3.23% as of today. There was a primary, commercial paper that they were raising for about, 100 days or so, which, it comes at 3.23%. So the operational companies are able to raise it at a phenomenal pace. So some of the promoter companies are able to raise their CP only at a much higher level. So there's a bit of a dichotomy within the group. Adani Green itself, of course, I've not been able to understand this phenomenon. And even if you think about it, $2.5 billion for 20% without any fresh issue means you're valuing the company at 5 times that, is 12.5 billion. That should be about 100,000 crores. Today's market cap is still 140,000 crores. So we're talking of them purchasing the stake from Adani at a discount of about 30-35% from the market price. So even though it's fallen from 1,200 to 900 odd, Total has bought it at 35% further discount to the current price. So in that context, I think the market may be valuing this company a little more richly than it should, and good for Total, I guess, and for the shareholders of Total. But I think people here should look at that, that shareholding change that Adani, the promoter himself, is selling at 35% below, and that this might be a little frothy. It's just my feeling. I'm not going to comment on the fundamentals at this point, but I'm just looking at the deal contours.
Okay, by the way, just pull out UPL once again. I think for second day running now, it's the top Nifty gainer. In fact, just big move happening on that stock now. In fact, UPL is just that kind of a stock, right? I mean, it gets into these kind of ups and downs. If you pull out a slightly longer chart of UPL, I think you'll see that. Remember, the high was 600, I think somewhere around that, and then it fell on those auditor concern issues, and now it's again bouncing back. Now, what do you make of a stock like UPL, Deepak? Because there's always been some concerns with UPL. The market's always had these concerns that something is wrong somewhere, but every time it has this dip, it gets bought. And how? Your thoughts?
So, we're not tracking it. One of the issues, one of the reasons why we don't is because of these issues that plague it once in a while. The problem really is that even if you are right, and if the companies, the companies all perfectly fine, that these issues, when they crop up, they tend to hurt the stock price quite substantially. And there is, although the business is operationally well spread out now, multiple countries, large balance sheet, I still am afraid of some negative news coming and hurting a portfolio which has this stock more than I am about the fundamentals. So I don't have deeper thoughts on the fundamentals here, but we've avoided it for this only reason that this has happened twice now in the last few years, and we're just not comfortable with something like that happening. It may not be a corporate governance problem, but it's just that when things like this happen, they impact the stock in a very negative way, and the volatility is not preferable here.
Okay, got that. All right, we'll take a quick break on that note. Deepak, do stay on. We have more questions coming your way. Of course, we will discuss HDFC Bank on the other side. The market's given it a thumbs up, quite happy with the way we saw the numbers play out for the December quarter. We'll get you the analysis. And also, just a reminder, our Alpha manager on the show today is Rajesh Kothari of Alpha Accurate Advisors. They've got some interesting stock trends and ideas. We'll discuss that after the break.